Hey guys, with the Bank of Canada's rate increase announcement last week and with the fast changing real estate market, I thought it would be important to have mortgage broker Adam Bazuk with Dominion Lending back on to discuss these changes and what this means for home sellers now, what this means for home buyers, and his prediction on the future of the real estate market. So I'm going to pass it over to Adam to go over these changes with you.
Hi, Paul. Thanks for the opportunity to speak to your clients. Once again, it's Adam Bazuk from Dominion Lending Centers. And I'm going to speak very quickly today because I just want to blurt out a bunch of information that might help your clients make some decisions. I'm going to cover two topics that sort of encompass the recent rate increases. There's quite a bit of panic out there. The topics would be, if you're in a variable rate mortgage, should you lock in? And also getting pre-approved and rate hold and stuff. So on the first part, listen, fixed versus variable, it's a personal choice. Fixed rates have been coming up a lot in the past 5 weeks or so. They have a mind of their own. It's not really based on any prime announcements, and they're still historically low, hovering just above 4%, but much higher than what we've been used to. And they came up very quickly. It's the speed at which those rates came up that has everyone kind of freaking out a little bit. And then last week, the government increased prime by 0.5% from 2.7 to 3.2. 3.2 is still, again, historically low, but higher than what we've been used to. And normally prime goes up by 1/4 point. So when it went up by 1/2 point, it really caught a lot of people's attention and caused, again, a bit of panic in the marketplace. So let's look at, should you take a variable rate, or if you're in a variable rate, should you lock into a fixed rate? As I mentioned, it's a personal choice. If you have anxiety about it, you can lock in, and most mortgage contracts allow you to lock into a fixed rate with no penalty or anything. You would just call your bank. I'm still a big fan of the variable rate, and I made some notes here. I'm just going to read them so I can get through it very quickly for you. So let's just make an assumption here. Conventional mortgage, $500,000 mortgage, 30-year amortization. If you took a 5-year fixed rate today or locked in at 4.09, the monthly payment would be $2,403. If you had a variable rate mortgage at prime minus 0.6, which today would be 2.6, the monthly payment would be $1,748. This is a monthly savings of $654.72, meaning the variable rate mortgage is $654 less than locking in at the fixed. That's a lot of money. And keep in mind, depending on when you arranged your variable rate mortgage, if you're already in one, if it was in the past couple of years, there's been some great discounts offered. Some people might have prime minus 1, less than that, prime minus 0.9, prime minus 0.8. So I'm just using prime minus 0.6 as an example to keep things relatively realistic, but you might even be better off than this example. Now, we all know prime's going to go up. So what if prime went up to 3.7? Your payment would still be $21.29 in this example. What if prime went up to 4.2 and you're in the variable? Your payment would go up to $22.65 a month in this example. What if prime went up a full 1.5% over the next year and a half, 2 years, to 4.7? Your payment would be $24.05 a month, which would be, in this example, which would be $2.84 per month greater than the fixed rate you could have taken today. So even with an additional prime rate increase of 1.25%, your payment is still lower than the fixed rate you could have taken today. The moral of my story is that even though prime's gone up, a variable rate mortgage with a good discount is still an incredibly good option. My personal preference is the move where you keep the variable or take the variable and top up your mortgage payment to what it would have been if you took the fixed rate. That's considered a prepayment privilege. Most mortgage contracts allow you to do this. You can leave it set that way voluntarily, and that extra amount is pure principal pay down. You're winning while prime and your variable rate mortgage is low. and you can turn it off, if needed in the future, but you're winning now. So don't panic if you're in the variable is my message. Consider taking a variable if you're in a good equity position, good jobs, things like that. But feel free to lock into a fixed if you have that anxiety, and know that likely your contract allows you to do that. And finally, on the topic of pre-approvals, rates are rising quickly, as I mentioned. So it is a smart idea if you're thinking of doing anything potentially mortgage wise to get approved and get a rate hold right now. So if you're moving, everyone always mentions a pre-approval. That pre-approval can come with a 120-day rate hold. Even if you're humming and hawing a little bit, get the rate hold. It's common sense. Rates will be higher next week, 2 weeks from now, next month. So the rate hold will give you that peace of mind that you can shop over the next 4 months. And if you decide to move and need a mortgage, your rate is protected. But even if you're staying put, same thing. Maybe you were planning on using some equity later in the summer for a project, and we're going to change your mortgage up or whatever. Get a rate hold now. You can get approved now for that refinance and then hold your rate until you're ready to pull the trigger within that 120-day window. So just smart to act now if mortgage changes of any kind are even remotely on the horizon, just to get a better rate because they're going up. So that's all I have for you today, Paul. Thanks again for the opportunity to make a quick video for your clients, and hopefully you all find it helpful. Have a great day.